Okay, folks, welcome to Sunday Night Futures Live. Sorry I'm late. My battery on my mouse died just now. So, thank God I had a spare at my disposal. Hello, everyone. Let's see who's here tonight. Good group. Familiar faces. Dustin, Oliver. Will, looking at BA this week. Good call. Franklin. It's going to bring some opportunity as well. It's also going to bring inflation. We're going to talk about that tonight. Hurricane Laura. Corey, hello. Nestor, AMD, you got it. Trish, hello. Amerimigo. Suresh. Jedi. Robert, WG Shocker, hello. All right, let's take a look at how the markets are opening up. Today's focus is really going to be on talking about our strategy moving forward as we see more and more data point towards, good morning, Joseph, point towards the fact that we have inflation that is rising, not at a dramatic rate, but it is certainly undeniable at this point, although the Federal Reserve is going to deny it until it smacks them straight in the face. So we're opening up. This is a 4-hour chart. These will all be 4-hour charts. We're opening up on the E-minis, up spot 2%. A little bit of a fade. We already have a new weekly high. So the path of least resistance remains to the upside for the E-minis. Let's go to precious metals later. Where are my small caps? I think the small caps are going to make a run at it this week. They were setting up nicely last week. And we are up a third of a percentage point on this session already at the highs of the session. No new weekly high yet, but I think that that's where we're going to go this coming week. I think we're seeing we saw good strength in technology on Friday versus Thursday. It looked as though on Thursday we were pausing a bit. Friday, so money moved into technology, pushing it up higher. That includes the semis. I still think that they are extended and that they're going to continue to rotate into different sectors. You saw the banks rally last week. We expected that. We were long on the banks. I think that they're going to take the Russell up. They're heavily shorted. They'll squeeze those shorts. They'll let the triple Qs take a pause, then rotate into the triple Qs at some point in time down the road. And we're seeing this over and over again. We did see the transports move up higher really well last week. So you're seeing some money move into the beaten down names. Airlines rallied. The NASDAQ 100, lagging. It's up, but lagging. The S&P 500 and the small caps. Let's check out the dollar. You know, we have one trading day left to go in the month, and it's an important one because if you take a look at the dollar on a monthly basis, in fact, I may even bring it up in a moment. If you take a look at the dollar on a monthly basis, we are trading at current below monthly support. Very, very critical that we hold that support level. You can see that we had stopped going down here early Friday. Do they hold the support level? Do they rally it? It's weak. It's very, very weak. And I'm going to go to a reason why I believe that it's only going to get weaker in the future. And I'm not happy about it. I'm really not happy about it. I'm sad about it, to be honest with you. Let's take a look at gold. Gold had a rough Thursday, but the markets woke up to what Jay Powell was talking about on Friday. Because on Friday morning, gold was surging, silver was surging. we were buying more gold miners. In short, what Jay Powell said was basically he said what was alluded to under Janet Yellen. When she said it, I said, this is going to be the future. Expect this. What they were doing is they were sowing the seeds for a very big surge in inflation. And for all intents and purposes, his verbiage has been, up till recently, that their target was 2% inflation. Now it's a range, an average of 2%. So that means that they're going to let inflation run hot, and they're going to try to inflate our way out of debt. And what does that prevent the politicians from having to do, at least on a federal level? On a federal level, it prevents them from having to raise taxes to pay down the debt. That's the last thing they want to do because they want to maintain power. The problem is for the states, they can't do that. You have California, which is going from, I believe, fact check me on this, they're going from a 13% state income tax to a 16% state income tax, I believe, for millionaires. Again, fact check me for accuracy. You have the state of New Jersey. Their gasoline tax is set to go up about 25% very, very soon, if it hasn't already taken place. And that's a 250% rise since 2016 in the gasoline tax in the state of New Jersey. The reason why the states have to raise taxes is because they're completely nitwits. They're unable to cut spending because their base are the public service workers. They can't cut spending. Can't do it, and they don't have a printing press. So, and not to mention the tax cuts hurt the blue states. Donald Trump's tax cuts. This is one of the main reasons why they hate him, is that he put a cap on home mortgage interest deductions and on the amount that you could limit your writing off of your state income tax. So New York, California, Connecticut, all high tax states, what you could write off on your federal taxes was now capped. And that's why they can't stand him. But did he do it for the right reason? Sure, and I live in New York. So anyway, gold moving up higher here, expected to go higher. No new weekly high yet. Let's check out silver. Silver up, wow, really nice move. Up spot 86% on the session. Very nice. Oil up. Yeah, that's the thing, Nestor. Nestor just typed in, California is horrible. I'm moving out of Cali soon, I hope. I mean, you have people leaving New York, especially the cities, in droves. I mean, it's great for my property values, but it's relative to other states. My property values here in New York, although I'm in the suburbs, are not going to increase on par with perhaps a market in Florida, where it's a lower tax state. Right? There is no state income tax in the state of Florida. So the migration out of New York, out of California, into Florida is going to help property values down there far greater than what I'm going to see here in New York. I love where I live, but unfortunately, they're making it tough here to stay here, even in the suburbs. And they're going to raise taxes. They're going to raise taxes because they just don't get, when you tax more, you get less. They need to cut spending. Hey, Kat. Yes, smash the like button. Thank you very much. All right, let's go through these. And I want to go over some charts. I really want to talk about what I believe is setting up as a roadmap for the future. Palladium, a little weak here, but I think we're going to break out. Gasoline, moving up. Notice I spend a lot more time now on commodities. Bonds are up. Yields a little bit under pressure. I'm going to go to a chart of the 10-year yield weekly basis. Went over on Thursday, and it's a harbinger of things to come. All right, let's take a quick. I want to check out copper. Dr. Copper doing very, very well, up over a half percentage point. All right, let's take a look at some charts, and I want to talk about stagflation. And there are correlations that are setting up at current that correlate well with the 1970s. And for those not familiar, I'm going to start very, very briefly with what stagflation is, when it started, what the outcomes were, and what the resolution was. And it all really began, if you look up stagflation, the data when it effectively began, they'll say 1972, 73. Just prior to that, you had Richard Nixon. Actually, it starts back with Lyndon Baines Johnson. Lyndon Baines Johnson wanted guns and butter. He wanted war in Vietnam. He wanted to finance the Cold War, but he also wanted the Great Society. So we went from an economy that was a creditor nation in a short period of time to being a debtor nation because of those policies. And in 1971 or 2, President Nixon, because other countries were asking for their gold back. Because remember, at that point in time, the U.S. dollar was backed by, in good faith, full faith and credit by the United States of America, or the Federal Reserve Bank, in gold. And it started with France saying, we want our gold back. And then other countries stepped up as well and said, you know what, we want our gold back. And then all of a sudden, overnight, President Nixon took us off the gold standard. And that is what kicked off, because you didn't get a cut in spending. What you got was more war, more Great Society. It's never ended since. And during this time frame, from let's call it 1972 to 1982, a 10-year time frame, you saw, this is the Dow Jones Industrial Average in candlestick, go for the most part nowhere. And you can see even on your RSI, it never once became overbought, anywhere near overbought during that time frame. It was stagnant. And while the stock market is not the economy, it tells a picture. And you can see overlaid here in gold is gold. And gold ripped through the ceiling as the US dollar during most of that time frame was very weak. And you can see here, this is the CPI, the Consumer Price Index. And this has been changed, this calculation, so it's not exactly the same. I would bet if they use the same formula, you would see this at a much greater trajectory higher during this time frame. But you could see the path was clear and defined to the upside with inflation. So it was a time of stagnant growth, rising inflation, rising yields, while the US dollar was collapsing. In short, it was a very expensive place to live with little growth, low opportunity, until the gentleman behind me, in conjunction with Ronald Reagan, said, okay, listen, Fed Chair Volcker, I have your back. Do what you need to do. Do what you need to do. Raise rates. And that's exactly what he did until he broke the back of inflation. And when he did, you saw the stock market in 1982, actually I should say 1983, break out to the greatest bull run the world has ever known. So in short, what we're seeing back here is it doesn't necessarily rhyme totally. It's not in sync totally, but there are markers, right? There are markers that are signaling that, you know what, we're heading for a very similar outcome. And the only thing that's missing is the fact that the gentleman behind me, Paul Volcker, is not in the office right now. And the gentleman that's in the office, Jay Powell, while I believe that when he was hired, had the right mentality and does have what it takes to do what Paul Volcker set out to do and successfully did, but due to politics, you know, I'm for the president, but you know, he's going to have to pull one heck of a rabbit out of his hat to make sure that this economy doesn't go into the gutter. And I don't see how we continue down this path after the election. I'm very, very concerned. And if the president doesn't win, I'm not going to get into politics here. I mean, my God, I fear for the country, to be honest with you, because there's no way they're going to allow the Federal Reserve to raise interest rates. So let's take a look at where we are at current. S&P 500 gap earnings. You can see they've taken it on the chin. Big drop. This is a quarterly chart. No shock there. Inflation. Here's a chart of coffee. It was in a long-term downtrend, now breaking out. We're not going to spend much time here. All right, but the trajectory is clear and defined. We have higher lows. All we're missing are new higher highs. Need more. This is out of sequence here. The stock market valuation. We are more overbought now, or I should say more overvalued now than we were during the dot-com crisis. And that's saying a lot. And it's being fueled by the Federal Reserve. Back to inflation. I'm sorry I took those slides out of order. This is corn. Corn prices. We've been talking about corn for a while now. We've stopped going down. I talk about this all the time. The first thing we need to see in the end of a bear market is for, on a longer term monthly chart, we need to see prices stop going down. And we did that back here. Now, corn is a staple in April. And now we're getting poised for a breakout. And look at the volume here. This is serious accumulation. Wheat. Wheat has stopped going down back in April of 2019. And it appears as though we are setting up for a beautiful W formation. So far on the month, we have a bullish key reversal bar. It appears as though we are going higher. If we rally through 6.09, we have the end of a bull market, a bear market. Now we're into a new bull market. This is when you go to the supermarket and you feel it. Now, we could point to copper. We could point to, what else do we have up here? Soybeans. I've never gone to the store and asked for soybeans, so I don't feel that. I will feel it with wheat. I will feel it with corn. And even corn went up this year. But soybeans breaking out above monthly resistance. The month's not over. 1 day left to go. A lot can happen, but it looks like we're breaking out here. I'm going to come back to the yield curve. The dollar. Remember, on that chart I initially went over, speaking about stagflation, the dollar was very weak during the beginning and middle phases of the period of stagflation. And then as yields began to creep up and began to catch up with inflation, the dollar caught a bid and then it took off. Now, what we're seeing here is not the dollar catching a bid. This is the monthly chart I spoke about earlier, and the dollar is at current trading down below the lower band of support. So what happens when you have the US dollar breaking down below support? You buy less commodities, and commodities become more expensive because it takes more dollars to buy those commodities. Inflation. Silver and gold. What have we been doing? This is the XAU, rallying, monthly chart. Yes, we're down on the month, but still a massive run here. Now, what we want to talk about is the velocity of money, right? The velocity of money is important to the conversation about inflation. We're seeing inflation already. We aren't seeing an increase yet in the velocity of money. What is the velocity of money? It's a pickup in transactions. And that's what really stokes the flames of inflation and or hyperinflation. We're still not seeing velocity of money. This is off of the St. Louis Federal Reserve's. As a matter of fact, I'm going to share this. I think everybody should have this at their disposal. RL, good evening. The velocity of money has just cratered. And why? It's because when you take a look at U6 unemployment rate, right? The number they want to feed you is the one here in gray. That's the U3 number, the unemployment rate. They're saying at current it's at around 10.2%. No. The real number, and it's actually higher than this, is 16.5%. That's the real number. And that only includes discouraged workers no longer looking. Here is the definition. U6 adds on those workers who are part-time purely for economic reasons. The current U6 unemployment rate as of July 2020 is 16.5. After 1 year, if you stop looking for earnings, you're no longer, if you stop looking for a job, you're no longer even calculated into the U6 report. So unemployment is actually higher than what the U6 data is reporting. So what happens when people go back to work? What happens to the velocity of money? People are going to want to buy goods. So what happens to inflation when that occurs? Take a look at housing prices already. Housing prices is the Case-Shiller National Home Price Index. You would think that we're in a god-darn depression / recession. You would think that home prices have gone down. No, they're skyrocketing. Why? People want out of the cities. They'll beg, borrow, and steal to get out of those cities. You're seeing inflation pulled forward already. What happens when people finally get back to work? You have to worry about the velocity of money. And if the Federal Reserve has not begun on their path of increasing interest rates to get ahead of the velocity of money, to get ahead of inflation, that's when hyperinflation kicks in. So we're positioning at current for this. I've been talking about this with members for a while now. We've been talking about silver and gold. I've been talking about it for well over 2 years now. We've been long of it. We're going to remain long of it. We bought more of it last week. Core position. And all of these are going to be core positions to keep us hedged against inflation. Utilities. I'm not loving utilities right now. I own them. I will be buying more. But the utility sector does well in a stagflationary environment. Why aren't they doing well right now? Why aren't they confirming the move up higher in the Dow Transports or in the Dow Jones Industrial Average? The reason is that people aren't paying their mortgages. They're not paying their utility bills. So now that you have yields beginning to break out on a weekly basis, it's going to make it all the more difficult for the utility sector to break out. However, as the economy, as jobs begin to come back, people start paying their utility bills. People are going to want to be in sectors that do well during stagflationary times, inflationary times, and that's utilities. They want to keep the lights on. So the utility sector should do well. I'm not overly bullish on them right now, but we're going to be positioned in them and looking to add on strength. Healthcare. Your people are going to need healthcare. What is the XLV doing at current? We are breaking out to new all-time highs. Where is inflation in the CPI data? Look no further than healthcare. Energy. Energy's not doing wonderful right now, but it will. Why? It's because as the US dollar declines in value, the energy that we develop here becomes more affordable to other countries that aren't in a stagflationary environment. And people are going to need energy. So energy will do well. Emerging markets. Emerging markets we are long of. We plan on buying more emerging markets. I do not want to be in US dollars anymore. I want to be in sectors that do well in a rising interest rate environment. What is breaking out? Emerging markets. Are they outperforming the US markets? Not quite yet, but I believe that they will be. We are at the highs of the month. And you can see, if I update this, we have broken out on the month on emerging markets. If you want to take a look at Vietnam, which I've been pounding the table on for a while now. My keyboard won't work now. There we go. Vietnam at the highs of the month, no breakout yet, still lagging here. I still think there's opportunity with Vietnam. So emerging markets is where we want to be. Here, take a look at copper. There's no inflation. It's just ripping through the ceiling. Take a look at where's my lumber? Here's lumber. Look at lumber prices. This is a quarterly chart. Ripping through the ceiling. This is single-family homes that have sold. If you want to know why the Case-Shiller price index is moving up higher, you're having bidding wars. I had to highlight this because we gapped up on the quarter in terms of sales. The biggest move since 2006. So the inflation is out there. When we really begin to see it hit our pocketbooks is at the fuel station, is at the supermarket. Best ticker for Vietnam is the VNM. That's what I would go with. Mark, you're in soybeans, corn, natural gas. Smart guy. I mean, if you want a nice play on ag, the DBA, I like this. We have alerts set up. I'm waiting to get into it. It hasn't broken out yet, but this is a great play. So that's my tale of woe here, folks. I mean, the only crime that we could commit right now is not paying attention to the signals that the market is sending us, and that is that we have inflation, we have real serious social unrest, just as we did in the late 60s, early 70s. It's reminiscent, clearly, and people need hope. And the only way that the president is going to be able to resolve this crisis before it becomes a real serious crisis is that, and I believe that he's got the courage to do it, and especially since he doesn't have to get reelected, he's going to have to cut spending. He has to cut spending, and he has to bring manufacturing home. If we see manufacturing come home, if we begin to build things here and people go back to work, well, then wages can rise with inflation, and then we could inflate our way out of this debt bubble that we're in. And yields are going to have to go up higher, or else inflation is going to erode the buying power of the United States, because these politicians simply do not have the guts to tell you exactly what it's going to take to fix the problem. And it's to raise taxes. They're not going to do that. They're going to inflate our way out of it. I believe the Democrats get in. They're going to inflate our way out of it by not letting the Federal Reserve raise interest rates and also raise taxes on the wealthy. And by wealthy, probably anybody making over 80 grand a year after a while. So more to come there. Let's go to stock chart requests. I went on a big tirade tonight. Sorry about it. But I think we had to talk about it. And that's where our head is. And that's what we're going to be looking at for the foreseeable future, is a core position in fighting inflation. And we're going to trade around those core positions. Let's begin. I have a lot of symbols to go over here. I'm going to go with weekly charts and daily charts. It's a dead battery. And for this segment, Trish, I got you. EWC Canada, yeah, that's a good ETF. Yep. The Canadian dollar should rally with commodities. Very good one. You got him in notes. Let me take notes here. It's okay, Kat. We'll take a look at it. All right. First up, Apple. Oh, and by the way, this portion of, if you want to know how I changed the background, I'll share it with you. No shock. There we go. This segment is brought to you by TrendSpider, the next generation of automated technical analysis. I use it all the time, scanning, analyst ratings, and seasonality are their newest features. So please take advantage of the 35% discount that we get. Use CON35 as your discount code. Use the link below, and you'll get TrendSpider 35% discount. Let's begin with Apple. We are off the highs of the month. Although I should say the week. Sorry, I'm used to going with the weekly chart. Let's go with the monthly chart here first. Apple. Right. We're tapping that third standard deviation Bollinger Band on a monthly basis. September seasonality drops off to usually up 56%. Weekly chart. Closed well off the highs of the week last week. Daily chart. Let's go back to the weekly chart for a moment. I don't like the fade on the week. Yeah. You see, we broke out here on the 21st. We retested support on the 24th. Held on the 25th. Held on the 26th. Failed on the 27th. I think we're going lower. Usually when you get a breakout point failure, which this is, or a bull trap, usually what happens is that you're going to retrace at a bare minimum back down to the lower band of support, which is down here at around, I'm not sure when their split is, so adjust this for their split, 480, 481 per share. That's where I think it's going to go. I think we're going to break here. So I'm not loving Apple. So I would avoid it. Wait for this lower band of support to get hit, touch, bounce. I'd be interested if it breaks through it as well. I wouldn't be surprised. I think that these stock splits, it's all, as my grandfather used to say, malarkey. It's hype. Don't keep it active for the week. I would avoid it. I don't like the breakout point failure. Again, usually you get a retrace back down to the lower band of support. Let's see if it holds. If it breaks, well, then it's coming down here to 472, spot 29. The next chart up, LRCX. Lam Research. Weekly chart. All right, so I just overlaid monthly resistance on top of a weekly chart in dashed line. So you can see that we broke out back here above weekly and monthly resistance. Then we failed to hold the week of August the 17th. Last week they bounced it back a bit off the lows, still a down week. Friday, you saw an inside day. So I think that 338.51, good support. If you want to nibble there, add more on a breakout above this upper band of resistance, wherever that price may be. As a matter of fact, they won't let me do it. Here. If we break out and above this volume shelf, which is acting as resistance, I'd be interested as a long trade. And we'll keep it active for the week. And again, you could look to open up a position or add to a position on a retest of 338 spot 51. I don't see compelling reason to go chasing it right now. I would buy the breakout or buy a pullback, one of the two, or both. CRWD. All right, monthly chart, off the highs of the month, very powerful chart. So we drew this line here a while ago, and it was because it was the rising lower band of support. It should be noted that this is now going to act as the rising upper band of resistance because we broke it back here in August, the week of August the 3rd. Now we're bouncing back some. Let's throw some overlays here. Nothing happening. Not enough data. We stopped right dead at resistance. $110.44 looks like good support in that range. Or if you get a breakout above 119 spot 23 and a close there, that's a nice entry point. Stokes are rising. RSI. is rising, and we have a breakout. I just want to see RSI validate a breakout on price. We're not there yet. Daily chart. A bit of topping action. Again, we're at resistance. So we know this is weekly resistance. If that doesn't happen early this week, well then, we wait for a pullback to the lower band of support. Come on, Bob. And we'll keep this active for the next several days. And there it is, folks. You do have some minor support below here. 116.33. Maybe that'll act as support. I wouldn't buy there. I would want to wait for a breakout or a pullback, mixture of both. It's rinse, wash, repeat. It's always the same thing with me. So that's CrowdStrike. UNH, United Healthcare. This should be a good play in our stagflationary portfolio. This is a monthly chart. You can see that we're already stair-stepping higher, right? Now we have a new monthly breakout. A very healthy chart. Weekly view. Pulled back some. All right, so I just overlaid a monthly resistance level and support levels on top of this chart. And you can see this is the value of having automated technical analysis. I didn't pick this up. So we're struggling at current to hold on to this, let's call it a support level. Let's say we're at support. We haven't broken it. We're struggling to hold on to it. You don't want to see this stock fail to hold this support level by the end of business tomorrow. Actually, this is a weekly chart by the end of the business week. Let's take a look at it from a monthly view with that support level on. Yeah. You can see we're struggling. We need to rally back here a little bit. And if we close above this monthly resistance level, that's a big breakout. Watch for a retest in September. And that's the place to add. If we rally tomorrow, that's a very significant move for UNH, just a monthly breakout. Daily chart. Nothing sexy happening here. We're stuck in a trading channel. Hope for a strong Monday. Because what you want to see is a close above, let's throw a number at it. Let's call it 317 per share. We could get there easily. So that's UNH. I like it longer term. Let's just watch how it closes out the month tomorrow. FXI. China large cap iShares. Broke through a volume shelf. Looks good. Very good month. You're going to have a bit of resistance here. But once you get out and above 45.74, it's game on to the long side. Now, me personally, I'm not big on owning Chinese stocks, but the chart doesn't lie. It wants to go up higher. Weekly chart, very good week last week. It looks as though the path of least resistance is clearly up. Daily chart. Nice. Very nice. I think it goes higher. Nice chart. WKHS. Workhorse Group. This is one we're pretty familiar with. Let's get rid of this old alert. It expired. So it's a powerful chart. I mean, we were so extended. I remember going over this chart while we were ripping through the third standard deviation Bollinger Band, and I said it wasn't going to end well, and it didn't end well. The high was what 22.90 per share, and we hit a low a few weeks later, at 17.20. Now we're in a trading range. I think that if you're bullish on the shares, you could buy more at the support level with a stop loss right below the low of this week, the low of the 17th, which was 17.60. I would buy there. It's expired. I'm going to create a new alert. Leave a little bit of sensitivity, not too much. And then I would look for a breakout. Oh, it ticks me off. I can't set an alert on a diagonal line. I used to be able to do that. I got to talk to our friends over at TrendSpider about that. I love being able to do that. I'm going to keep this one active a little bit longer than 5 days. We'll go out 10 days. Why? It's because we could bounce around within this triangle formation for a couple of weeks before we get that breakout. So ideally, we pull back, retest support, nibble, open a position, tight stop below, then add more on a breakout. Easy peasy, that's how I would do it. Daily chart. Not a good day on Friday. You really want to see it hold the support right where we have our alert. And just beware that if we do break down and retest the support level, there's a lot of history at this price point. So it's going to take a while to back and fill and get through this yet again. Right now, the bears are in control, very, very short term. Longer term, I think it's still a bull story. Shorter term, bear story. Very short term. I think that is one more. XPO. Franklin. XPO. Nice daily chart. Let's see where we've been to identify where we might be going. Very nice. Love it. Throw some automated trend lines, see what I'm missing, if anything. I'm right on the ball. Right there. Didn't get me, TrendSpider. I call it my spell check for technical analysis. All right, so let's suppose that we close out the month above this breakout point. I think that if you do well, let me set an alert there. God damn it. I think that if you get a retest of, let's do this, 84.66 in September, you could add more or open a position. Just a simple retest. We'll keep it active for a few days. I don't know what this company does. Frankie, you're going to have to fill me in on this. I like this chart. And I want to know when we break out above can't create an alert until you have base points in the future. All right, it's not let me set an alert. I guess because it's contradicting the one I just set up. There's a conflict there. All right, we'll deal with it. We'll drill down further. We'll work around it. There's always a workaround. All right, so weekly chart, a very good week last week. Closed right near the highs of the week. Daily chart. Just keep in mind that you're in ascending wedge formation and you're nearing the apex. You're very close to the upper band of resistance. So would I be a buyer right here, right now? No, I'd wait for that pullback and a retest of monthly support in early September. And I think you'll get it. So it's a good looking chart. Longer term. I like it. So it's a long, no doubt. Let me go back to, I have 6 minutes left. Let me see how many symbols I could take here. Let's see. Oh, W for cat. Oh, look at this. Cat, I think the last time I looked at this chart was when we were talking about it last. My alerts expired. That's why I didn't get alerted. Oh, this one got triggered. So serious breakdown here on Wayfair. Short term, anyway. We were above the third standard deviation Bollinger Band. No bueno. We broke out the week of the 17th. Last week, breakout point failure. Add to that, it's an outside a bearish engulfing week. The week. Not looking good. Daily chart. I know you're looking at short, Cat. I think the way you need to play it is that stocks like these rarely just go straight down. Let's clear all these annotations off. Okay. So I think what you need to look for on a daily chart is something similar to this. Here was your high. I'm using a monthly chart for illustrative purposes only. Here was your high. Here was your lower high. And then here's your confirmation breakdown. And that's when you saw the deluge of selling begin. It wasn't over here. It wasn't over here. It was when we pulled back, rallied, put in a lower high, and then once we broke the lower low, that was it. Program selling. So I think you could expect to see over the course of the next several days, maybe even a couple of weeks, where will probably, the bias is going to be to the downside for the week, then they'll drift it back up, then the test is always at the top. Do we break out or do we break down? And then I'd be looking to open up a short position. You can take note already on daily Stokes. We have a lower high and lower lows. Same deal on RSI. Lower high and a lower low. I think you can scalp a swing. If you make a new daily, weekly low, you could probably swing trade a scalp to the short side, but I don't know how long that would stick around. Probably down to 295.56 to 273.79. Then you got to expect a counter trend rally, and then again you go watching for that lower high. That's my play on this. All right, Square. Stalling out here. And it faded on the week last week. I already have an alert set up here. I want to know when it breaks out. Otherwise, I'm not interested in the shares. I want to go back to W for a second. I want to check out seasonality. I've been playing around with this. It only goes back 6 years. Just keep that in mind. It only goes back 6 years. Month of September, usually up only 40% of the time. W. All right, SQ. This only goes back 5 years on seasonality. So it's thin data. September up 75% of the times. We're at resistance. We're struggling to get through. The trend is still clear and defined to the upside. Daily chart. I see no compelling reason to go buying these shares right now. Not until we break out. That breakout point is roughly at around 160 per share. That's Square. ODFL for Tommy. Old Dominion Freight. This is a good one. Wow, really good one. It's had a nice run here. Weekly chart. Very nice. We broke out above resistance here. Close to a retest here. Nearly a full retest here. Rallied off the lows of the week to close positive. Good looking chart. Let's check out seasonality. Up 56% of the time in the month of September. Going back 16 years. So a good amount of data. Daily chart. A little bit of resistance here, Tommy. We broke down on the 25th, and we've been limping back up ever since. Going to use raindrop charts for a moment. If it fails to hold $200 a share, I think you could see a retrace back down to this lower band of support at around $195 per share. They managed to close it strong on Friday, which is important. The question is, does it hold this gain? There's a big battle going on here. Ideally, it holds this support level, consolidates sideways, then it resumes its uptrend. Or wait for pullback to around $195 per share. BA, Boeing. I have an alert set up here. So, looks like it did well on Friday. Well, no, pull back on Friday. It did well on the week. Yeah, it was up on Friday. Daily chart looks really good. This volume shelf is a nightmare. My alert got triggered on Friday. But it didn't hold support. I want to reset it. I just want to know how it closes out a 4-hour bar so I don't get a false positive read on an alert. All right, so that's reset. I'd really be interested up here at 189 once we get through this volume shelf. You know what? Let's make it 4 hours. We're going to give it some time. We're going to leave it open for 15 days. And this is what I would do. I would nibble on a breakout just to scratch the edge. On a close above 179.41. Add more aggressively on a rally on close above 189.86 because that sets the stage for a rally all the way up to 234.46. So that's my play on Boeing. I like the rising Stokes, higher lows. Same deal here with RSI. I think Boeing's going to have a nice week. XPO. Oh, we already did Expo. Oh, right. Thank you for that. Exploration, energy. Gotcha. Thanks, Franklin. All right, what else do we have? ODFL. All right, I'm going to make this my last one. All right, Bing, you on KL? I'll do yours last, okay? We already did this one. Okay, so I'm starting to lose it. Getting tired. KL. Kirkland. I already like it. Yeah, I think that's fair, Oliver. Close above 180 would be rock solid for Boeing, no doubt. Kirkland looking very good here. Weekly chart. They couldn't close it positive. That kind of irks me a little bit. Daily chart. But they did break it out on Thursday. Friday they pulled back and did a retest. I think this could be bought. You already have your retest. It's in the books. Stop loss right below Friday's lows. I think it's going higher. RSI, higher lows. We're breaking out. Higher lows. On Stokes, it goes up. Last one. Cat, Lulu. I like Lulu myself. My gym opens up on the 1st, finally. 15 pounds of COVID. You're welcome, Cat. If you folks are just joining, if I could ask you to smash that like button, it really helps me out. Thank you very much. Lululemon looking really good. Seasonality going back 13 years. Very good month. 77% up performance in the month of September. Weekly chart. An up week. A little bit of a fade. Daily chart. Outside reversal bar on Thursday. Inside day on Friday. No continuation breakdown. I trade with a little bit of caution here. Let's go to a 4-hour chart. See if this sways me at all. Yeah. See what they were doing here? There's a lot of resistance up here. Let's go. I want to put on the raindrop charts. Sorry for the silence. I think this is one where I'm assuming that you're bullish, Cat, and you're not looking to short this. Take care, Frank, and have a great night. I'm not loving the chart. Short term, very, very short term. Long term, I love it. But as an entry, I'm reluctant to go buying here. I think it's struggling. So what would be the strategy? I think if we pull back, retest 371, it holds. can nibble there. If it fails, it's probably going to come down here to the rising lower band of support. That would be a good entry point. Or if we do not break down, suppose I'm just being a sissy right now, I would look for a breakout above resistance, and if it breaks out to new highs, then there's no resistance above. Then it looks really good. I just don't like that price action. I don't know whether there was news or whatever, but this is bad price action on Thursday. So once bitten, twice shy type of thing. So I would just give a little bit of room here. I don't see any compelling reason to go running in right now, unless, of course, they gap it up, wait for the retest of support, and then go adding more to a position. You're welcome, RL. All right, with that, folks, I'm running over. Everybody have a great night. Thanks for joining. Smash that like button. And everybody have a profitable trading week. Be well. Do, 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 do.